Welcome to PIMCO Pod. In this episode, we delve into the economic risks, benefits, and uncertainties that have emerged in the wake of the recent election. Stay tuned after the conclusion of the podcast for additional important information. Economic Changes That U.S. Voters Want to See by Tiffany Wilding. Donald Trump's decisive re-election last week, winning the Electoral College and the popular vote while making inroads across nearly all demographic categories, has been hailed by many as a bold vote for change and a clear mandate for his agenda. Yet, as Adam Tooze, Columbia University historian, points out, across elections globally, incumbent parties have been losing as voters look for a change from post-pandemic economic performance and from painful price-level adjustments that have left many worse off in real economic terms. These more generalized election trends across countries are more interesting when they are compared with actual economic performance across countries. OECD metrics show that in contrast to almost everywhere else in the world, U.S. standards of living have not only improved over the past 5 years, they have soared. In other words, judging by aggregate economic performance, the U.S. is arguably in the least need of major changes. Nevertheless, the aggregate statistics mask large differences in individual experiences across the income distribution. And the reality is, many lower-income Americans, in particular, are not better off. As a result, American voters, like many elsewhere, voted for change. And based on Trump's first term and the narrow Republican majorities in both houses of Congress, Trump is positioned to make good on many of his campaign promises for change. Given the change people are seeking is an economy with more equitable growth and real living standard improvements. Policies that moderate inflation, increase efficiency, and support productivity are most likely to address the needs of American voters. Economic strength and U.S. exceptionalism. Taking a step back from the election, consider the economy. As painful as inflation has been since the pandemic, the U.S. has fared much better than most other developed market economies. Before the pandemic, U.S. living standards, measured by purchasing power adjusted per capita GDP, were among the highest in the world, 35% to 50% above those in the Euro area, the U.K., Canada, and Japan. Since 2019, the U.S. has maintained its lead. Outside of a few smaller Eurozone countries, the U.S.'s economic performance surpassed that of all other OECD nations, with real per capita living standards soaring by 10%. This contrasts with Japan and the Euro area, which have grown by only about 2% to 3% over the same timeframe, while living standards in Germany, the UK, and Canada are now worse than before the pandemic. What's more, the U.S. has recorded this expansion despite inflation that has been below the median of other OECD countries. America's cumulative 19% increase in its consumer price index since 2019 is actually below the cumulative inflation in Germany, the UK, and Australia over the same timeframe. These numbers reflect a remarkable U.S. post-pandemic productivity surge. Unlike any other country, the U.S. has surpassed its pre-pandemic productivity trend, driven by strong growth in non-residential investment, particularly in intellectual property and research and development. Overall, these trends suggest that compared with almost every other country, the U.S. economy is arguably less in need of drastic change. So, what happened? Although the U.S. economy has done better on average relative to most other regions, there are many who haven't enjoyed the gains. The aggregate statistics hide the fact that standard of living experiences across wealth and income levels are drastically different. According to the Fed's distributional accounts, real net wealth levels for lower-income populations are worse than they were in 2019, although the last 5 years have been a boon for more wealthy individuals. Navigating uncertainty. Trump's win is likely to embolden him to implement the change that he promised, and those changes could have potentially meaningful implications for the economic outlook. A policy focus toward achieving fairer global trade, more efficient markets, and a more sustainable longer-term trajectory for U.S. government debt could potentially keep U.S. living standards rising. Implementing thoughtful immigration reforms that grow the productive labor force, streamlining regulations and project permitting limitations that have hindered investment, and opening up export markets for U.S. projects could also be big wins for businesses and workers. On the other hand, ramping up trade tariffs without strategic gains, implementing mass spending cuts across government agencies, and pressuring the Federal Reserve could disrupt the economy, increasing uncertainty, delaying investment and hiring, and weakening U.S. exports. Stricter border policies could challenge businesses that rely on immigrants. Rising tariffs on capital goods could make it more expensive to invest in the U.S., potentially amplifying inflationary pressure while hurting the competitiveness of the U.S. export sector. Takeaways. In the end, the U.S. economy has generally performed well over the last 5 years, although not every American has enjoyed that performance. Trump's agenda, rooted in disruption and change, could further strengthen the U.S. economy, keeping productivity and living standard gains the highest in the world and broadening the economic benefits across the income distribution. It will be important to keep in mind that isolationist, populist policy agendas have historically stifled high productivity growth and have intended to strengthen the economic outcomes of the constituencies that need it most. Thank you for listening. That was Economic Changes That U.S. Voters Want to See. For future insights, please follow us on your favorite podcast platform. Macro Signposts highlights weekly takeaways from the data analysis conducted by our team of economists and other macro experts. For PIMCO's official views on the global economy, please visit PIMCO.com. The discussion and content provided within this podcast is intended for informational purposes only and may not be appropriate for all investors. Reliance upon information provided in a podcast is at the sole responsibility of the listener. The information included herein is not based on any particularized financial situation or need, and it is not intended to be and should not be construed as a forecast, research, investment advice, or a recommendation for any specific PIMCO or other security, strategy, product, or service. Past performance is not a guarantee of future results. All investments contain risk and may lose value. Investors should speak to their financial advisors regarding the investment mix that may be right for them based on their financial situation and investment objective. Podcast may involve discussions with non-PIMCO personnel, and such content contain the current opinions of the speaker, but not necessarily those of PIMCO. Other podcasts may consist of audio recording of an existing PIMCO article, and such material contains the current opinions of the manager. The opinions expressed in all podcasts are subject to change without notice. Information contained herein has been obtained from sources believed to be reliable but not guaranteed. PIMCO, as a general matter, provides services to qualified institutions, financial intermediaries, and institutional investors. This is not an offer to any person in any jurisdiction where unlawful or unauthorized. For additional important information, go to www.pimco.com/gbl/en/general/legal-pages/podcast-disclosures.